Let's turn now to a call from Goldman Sachs. It has lowered earnings estimates for the S&P 500 for each year until 2024, saying that margin contraction in the third quarter signals more pain ahead. For more, we're joined by Bloomberg's Dani Burger. So, Dani, quite a call.
Quite a call. And Kaylee, the reason it is so important is that at this point in the cycle, we're all trying to judge, has there been capitulation? Are valuations cheap enough? Can we jump in yet? Are things bad enough? Well, valuations only look attractive if you are assuming that we're going to get earnings growth next year. If earnings are going to fall, or if they're flat with Goldman Sachs' new call, it does mean that we are still expensive on a price to earnings ratio. So Goldman's saying, look, we previously overestimated the margins that would be maintained by companies. There's going to be greater margin contraction than expected. That means S&P 500 growth for next year, it's going to be 0% when it comes to earnings. It was at 3% previously in their view. If we have a recession, though, then EPS will fall 11%. And in that scenario, it is a very difficult call to say that stocks are attractively valued. Now, we do have JP Morgan saying that, look, yields are likely to peak in treasuries, and that does mean that all of a sudden equities are attractive. So this is the debate. Are earnings or are yields more attractive? Well, I'm going to combine them both for our radio listening audience. I have what's typically called the Fed model. It's income from stocks versus income from treasuries. This is one way to look at valuations. Well, if we are peak now and yields stay where we are, it still is very challenging math for stock valuations. The premium you get on earnings from stocks is at its lowest since 2010. If yields are going to look attractive, if we're going to get a premium back for equities, either we need to see a pretty big pickup when it comes to treasury prices, or stocks need to tumble, or earnings need to be very strong. Kaylee, considering Goldman's call, that doesn't look likely.